Hello traders, Gary Wagner here. It is approximately 6 p.m. Tuesday, the 3rd day of January 2012. This is coming to you from the Mediterranean, which means that it is approximately 11 a.m. in New York currently. And this is the daily report for gold and silver. We have a major rally going on in the market right now, with gold having just flirted with 1,600 per ounce. Both silver and gold are substantially higher. We are looking at a daily chart of the spot market of gold, and as you can see, I have basically put up, these are the Elliott wave moves that we've seen. We've been talking about this last major correction. B, our final wave down. This is our C. And now that we've seen this market really take off from this point, it absolutely appears as though we have, in essence, what's called a flat bottom correction. If, in fact, the market continues to go higher, as I believe that it will, we will, in fact, have seen this low be the low for quite some time. I think that we're going to go into an extended rally. I have a couple of reasons why. We'll explain that through the show. When we take a look at this chart, I'm going to look at it in a couple of different ways, both in standard candlestick and in Henkin, because I think that there's good information that we can derive from that. I'm also going to be looking at silver this morning. Of course, we sent out a buy recommendation this morning on both gold and silver. Traders who took that call, you should be in anywhere between 1575, 1580, somewhere in that. Current print is 1598.41, 1599.41 bid ask spread. Now, the first thing that I think you'll see interesting, one particular pattern that I look for in a candlestick after an extended downtrend is that three river Morningstar variation. Why do I call it a variation? Well, for it to be an actual true Morningstar, this red candle color wouldn't be important in the star. What is important is that it's a small bodied candle, but this would actually have gapped below the low to give it that star formation. The body would. You can have the tail or the wick go into it. We certainly don't see that happening. It is mostly the variations that we look for, and in the cash market, because they are a continuous market, you're not going to get that gap down anyways in most circumstances, but you will get a scenario in which the market opens, this is the black candle we're looking at, moves down, and then it opens on the same place as they do the fix, and then you'll get that candle type candlestick. Now, we've got a long white line in here. When we take a look at this, I'll go ahead and blow that up for us. You can see that there's been good range in this marketplace itself, and we can certainly see that it absolutely appears, at least on a tentative basis for now, that what we are looking at, of course, is this flat bottom. Flat bottom simply looks at A and C having equal lows, and you can see they're approximately the same. So traders, what am I looking at for this market itself, and what am I looking for it to do? Well, my sentiment obviously is that we're going to be moving higher, but let me explain what I think is going to happen and what we're seeing. If in fact, when we look at this current Elliott wave count that I have, and I'm counting this as our major 3 here, and this move, this ABC, is all a part of 4 right in here, that means a couple of things. First of all, it means that we've finally weathered and seen this correction end. Does that mean we're not going to see peaks and valleys? Of course we will, because we're going to go into a couple of sets. We're now going to enter a major 5th wave. And a major 5th wave, unless it's a truncated wave, will exceed the top of wave 3, being major wave 3 right here. So if we've got a major wave 3 goes to 4, 5 by virtue, except if it's truncated, will exceed that, which means that this rally, and this rally is going to be composed of 5 subwaves, so it's not going to be straight up, but that this rally itself is actually going to take us to a new record high. New record high would be above 1900. That means we're going to be looking at gold approaching 2000, at least above 1900. Now, is this going to happen overnight? No, because when we look at the amount of time it took to complete wave 3, this major 3, that was absolutely from February of last year all the way up to the conclusion, which happened what, roughly in August to September. So I'm not talking about something that's going to happen overnight, but I'm talking about the fact that we have now entered a impulse wave, the final impulse wave in this major cycle. That means, one, we'll see a new high. That also means that the correction that should follow it in about a year, traders, should be a multi-month, fairly extended correction. So we'll have to see how that pans out at that point in time. We're certainly not there, and it's not something we need to even consider at this point. We really want to focus on the intermediate and minor counts of this major 5. Now, when we look at this particular chart, I'm going to go ahead and convert it to a Henkin chart, because in the Henkin chart, we actually get some new information that I think is definitely worth noting. Let me get that in here and plot this for us. And as you can see, now we're in Henkin format, this Japanese average, and it is a daily chart. And even on a daily chart as a lagging indicator, there's our move that's daily. What you're seeing is that we have gone green. There can be no doubt about that. And it's signaling that an uptrend has begun. Now, realize you've got these tails that are sitting here at the conclusion of this correction, and you have wicks on both sides, so it hasn't fully developed. But the one thing that we can really see when we plot it this way is, if you recall, traders, we were looking for a 5 count on this last wave. 1, 2, 3, 4, and 5. We got our perfect 5 count. In essence, what we did get was when we take it from here, 1, 2, 3, and then we got a 1, 2, 3. So we ended up with basically, when we look at the sub count here, a 3, 3, 5, which is absolutely what we're looking for. So in this particular case, although the subtleties, the intraday noise was not something we could plot, we certainly had the ability to take a look at this market from this vantage point and get some really good information. Now, where do we think this wave now is going to go? Because wave 5 itself is going to, in most likelihood, be composed of a 1, 2, 3, 4, and 5, taking us to new highs. Of course, I haven't drawn them to scale. And we'll have to see how that plots out. But for those who have been following me and know how I run my calculations for Elliott Wave, it is the first wave, wave 1, that becomes our benchmark. So until we have that under our wings, I'm not going to be able to do any real hardcore projections yet, because the most important thing when I look at a basic Elliott Wave count is to have wave 1 as the benchmark. We're just in it, so we'll play it by ear. Traders, in terms of stops, as my announcement said, they've got to be under here. It doesn't make sense to put them anywhere else. We're going to see some volatility. We have had a dollar that's weakening and higher crude oil prices, some sword rattling over in Iran, and that's kind of moving this market up. Traders, we are currently looking at a daily chart. This is cash market silver, and you can see that that is also moving higher. We'll start with the Henk and then move it to a regular daily. But you can see the range today has been from under $28 to over $29. We're seeing a tremendous move in this market. Traders, you should be in at the lower end of this. Actually, you can be in anywhere between under $28 to up to $28 per ounce. So you've got great positioning on that. You can really see when we look at this particular chart. Let me go ahead and kind of blow that up for you, traders, so that you get a better idea of what we're looking at. You really see the way that this market ended up consolidating. As it came down, you can see you had these absence of the lower wicks. You get a perfect reversal signal, these dojis here. You get 2 of them. Now also realize we're coming out of a new year, so you're going to get a thinner market. And you've got this, of course, nice green candle coming into play. When we convert this particular silver chart and remove the fact that it is a Henkin, in other words, converted to a daily candlestick, you can see just how nice and strong this move is. Traders, you've got a good position in that. ones who are trading in gold got a good position. I think we're going to knock it out of the park this time. I think we're going to have a great first trade for our first trade in 2012. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you soon for our next daily update and review. Traders, I will be back stateside next week. I will be doing reports from the Mediterranean throughout this week, so they will be a combination of either videos or trade alerts and email notices. But I will stay on top of this as I always try to. We'll talk to you later. Bye-bye.